So yeah, I think I got this stream going. I'm gonna see if a person or two actually comes and ask any questions about charting. Um, if not, I'm probably just going to cover a little basic information that I wanted to share. Then I'll shut it down. So just to update on some of the information, I have been kind of video logging for quite some time. I've had quite a few people that may have been exposed to my name and or information. So I did want to do a brief update. I know it's a kind of odd day, so I posted it over in Twitter to see if anybody would actually have any questions. So I'm going to give it a little time and then I'll begin. So I'm going to go on a momentary pause here and I'll be back. All right. I think I'm going to just begin to try to cover some of this information here. But welcome. First chart we're looking at essentially here is the DXY. So this is a this is a look at the dollar versus a basket of other currencies, right? So it kind of gives you a strength indicator of the dollar. Now, the reason I'm really kind of pointing to this particular chart at the moment is because I want to show something in particular. So this time frame here is kind of your 2014 time frame. These are very early days of crypto. Now, of course, crypto goes back a little further. So if we wanted to expand this out, the entire life of cryptocurrency, right? Crypto was essentially born around here, 2009, right? Um, so this is a wider view, but here, I want to illustrate something here. So this was the birthplace of it. Really wasn't much going on in Bitcoin during this time, right? It was so early. But we get around here, and this 70 range. If you look over to the right, it's kind of a very significant point, right, in DXY because it was a historical low for the valuation of the dollar versus other currencies. So if I zoom out a lot more, right, we can get a picture of what the dollar has been doing over time. So now I'm zoomed out, significantly more. And we have this low here that was coming in at 79 here. Let me just go ahead and go back. And this will take us entire time since the dollar has been off the gold standard, right? So around 71 or so back here, dollar went off the gold standard, went down to a low, right? And then around 79 or 80, right, we started this uptrend that we can see because eventually this yellow line goes on a very long multi-year uptrend, right? Until a downtrend started, right, around 85 or so, that led to these lows, right, that the dollar saw until the next uptrend, right, that saw its kind of most recent high, and then a subsequent downtrend that put the dollar at some of its historical lows, right? So this is the context that crypto was created in, is in this environment where the dollar was at its historical lows, right? Now I find it interesting that during this period of time here, right, the 2000s, the dollar was just going on a significant downtrend. And a lot of people look at this period of time and say, oh, this was American growth, right? This is a dot-com era where we built some of the largest companies of the world, had growth. But in reality, as a metric of the dollar versus other currencies, it was a very long downtrend towards historical lows, right? And then we have this environment where crypto is created, this area here in these historical lows, and I'm going to zoom back in. All right. So now I'm kind of zoomed back in. We got the birth of crypto in this area, right? And then we kind of just peg along. And then around here, the dollar recovers, right? 2014. So essentially, in most of crypto's significant lifetime, the dollar has been only in an uptrend, right? And I'm identifying this uptrend here by the path of this yellow line, right? Because if we look at these other lines, they don't give you a trend, right? But if we look at this, we can clearly see the trend. So the dollar has been in this perpetual uptrend with a little low here, right? With a little low in this period here. And the interesting thing here about this particular little low is that when it hit its bottom, this was crypto's all-time high. Dollar recovers, right? Continues along its uptrend, right? And this is the time that most of the money was sucked out of crypto. Then we get inferred here, right? The 20, this was the COVID situation. So the dollar goes on this kind of downtrend. Of course, everything does, right? Because of the impact COVID had. And we had a lot of money sucked out. But we get to this bottom, and guess what? This is almost the exact period of time that crypto had its second all-time high, right? This is your 69,000 Bitcoin. And then all of a sudden, the dollar recovers, right? And it sucks all the money out of crypto. Well, if we zoom in a little bit, the significant thing that we have going on is we have a loss of the 19, right? Which in some regards is significant, right? Because this should identify the trend. This is confirmation this trend is turning. What we don't have is we don't have the crosses to solidify this move for anything significant or long term. So when I say crosses, we're looking for this white line to cross over the yellow, and this will kind of confirm that this trend is going to continue and start testing these supports. If this blue line also crosses, then it's more ammunition, right? That this is going to then continue to cross. And as I said, test these lower moving averages or supports, right? So this is what we're watching for, because if we get into this area with the dollar, which let me get my little cross back up. But if we get into this area with the dollar, then it's a potential that we could see or lose this area and get further down. We could see the setup that is perfect conditions for a new all-time high. So this is, this is the beginning of a setup to create the conditions for a new all-time high. Price going under the 19, next cross, and you have perfect conditions, right? As this goes down, ultimately setting the perfect conditions with a loss of this highest moving average. So this is what we need to be paying attention to, because this is the only real correlator that we have that has remained consistent throughout the life of this, situation that we call cryptocurrency. So the dollar's been in this strong environment, except for our two dips, which created our all-time highs. And we're now setting the conditions for the next dip and potentially our next all-time highs. Now, if the liquidity crisis that people are talking about gets even worse, more people stop using the dollar for international trade. I think the bigger question that some people are asking is, could this even set a new all-time low, right? And so if we zoom back out, remember our historical low was here in the 70s, right? So could this condition here in the current economic environment and geopolitical environment lead to a new all-time low on this next downtrend? Because we really haven't had a confirmed downtrend till back here when this yellow line started crossing the highest moving averages. These set the conditions for all-time low. So we haven't had a condition for all-time lows, right, since here, right? We've moved around and set that low, double tapped on that low and got back positive. And even during these distressful times, the trend didn't turn much, right? It kind of dipped, but it didn't turn, right? Come here, dipped to its lowest point before turn, but didn't turn. Had this yellow crossed over the white, right, and brought all this down, then we would have been setting the conditions for a new all-time low. But we don't have those conditions now. but we have the beginning of a trend turn, and this is what we're watching, right? And if it ultimately leads to this condition that I'm watching, then the yellow crossing this highest moving average by number, which is the lowest moving average in sequence, right, would set the conditions that we could then put new all-time lows as a potential on the table. But I just want people to see that the birth of crypto in its whole entire lifespan has only been in this positive environment for the dollar. There's been no true negative, right, trend like we have here, right? This is an actual negative trend. And our previous one before that, so we can kind of just see what I mean by negative trend, right, was here. So we had yellow cross over all the highest moving averages and set what that time was a new all-time low. So each time we've crossed since the beginning of this dollar fiat experience, right? We go up, we set a new all-time low, right? We go back to try to recover. This recovery never got as high as the previous recovery, so we saw the lack of strength, and we saw our second downtrend because we only had two, right, in the life of this fiat. It set a new all-time low, and we didn't get back to all-time high or the previous high, and we're almost setting that conditions for a potential new all-time low, which could potentially go to the 60s. And what would that mean for the markets? So I just wanted to make sure that I shared that, so people could kind of get a look at the way that I'm looking at these things. This is going to be an important moment for crypto. So watching this, I would continue to look at, see if price stays under this yellow line, which is the 19, right, on the EMA. And if you start to get those crosses, and yep, should eventually lead to nice price appreciation in your crypto assets. So want to definitely keep an eye on that. Let's see, what was another thing I wanted to quickly look at here? I'm going to pull up Bitcoin. Let's see, spread this back out. So people think charting is hard. If you're not trying to scalp tops and bottoms, right, you're just a long-term investor, here's a good thing to look at. You look at the health of your asset. So of course we were in this uptrend because prices remained above your 19, came and crossed down over your 19. Of course, this is a monthly chart, by the way. Tested some of your lower supports, kind of held 2020. This is your COVID, pushed it down for a brief moment, still remain strong. And here's an important thing I want people to understand, because sometimes we're fixated on candles and we don't take in other things into consideration. So although the price lost the 19 here, right, which puts you in this negative kind of trend environment, right, by the rules, we didn't see the white line that I got highlighted here while I'm in this position. You can see it. It literally bounced off the 19, and the blue never threatened to cross. So you didn't have a confirmed long-term trend, even though price went under. It's a great opportunity to take, go out and then rebuy back, of course. But as far as knowing what your expectation was in this, you knew it wasn't long-term because essentially your three never crossed it, right? And so it maintained its strength, got back right above the 19 and continued on to its long uptrend, right? And so we go back in time or forward in time, we see it comes down here, tests the 19, keeps all of its strength as it going over here until it finally lost this 19. But as I stated back here, right, price lost, but you didn't have any loss of the three because the three is way up here at this point in time, right? And your blue is significantly up there too. So you didn't expect this to be some significant drop, even though price broke it, right? And you see it return. Came over here, comes over here in this moment of time, and it breaks it again. The only difference is when it breaks it this time, now we're starting to get this three to cross, and we know that this is getting momentum. So the out by the rule is here, but you know what's going on because you're getting the cross, and then you get the blue cross, and you know that this is your confirmed trend to which should get you to your lowest EMAs. So we didn't hit the last EMA, right? We hit the second to the last, which became support. This thing really went bad, it would have used this as support. So this is kind of a sign of strength, and it only went to here. We see the trend turn back in the short term as tracking this white line. We see where the blue is at. So this moment in time is significant because now price is back above the 19. We're just waiting on the cross, right, to give us the perfect conditions for when price can set a new all-time high. And if I zoom in a little more, you can actually see that the blue line needs to cross as well, right? And by the time we get white and blue and price all above, we have perfect conditions for new all-time high. So we're heading in that direction. If something happens to white line happens to come up here, bump it, and then turn down, well, we know all this momentum is lost, right? Price probably is under this 19 where you take your exit and you look to pick up more Bitcoin as it falls back down. So you just have to follow the what is and not try to figure out what may be, and just keep tracking this progress over time. If it crosses, bam, we're in perfect conditions for all-time high. If it rejects for some reason, price goes below, we'll be taking some off at least I'll be taking some off the table and making more Bitcoin as it goes to whichever lower support it happens to hit as a result of that. So that's how I'm tracking Bitcoin. The positive news is the 3 is looking to cross. Your blue is in an upward trajectory so that it can eventually cross. It's just going to take some time for this to play out as far as these crosses, because it would need some significant price movement up to drag it up, or we need to hold this price range over a significant period of time, right, in order to drag this up. So this is not something that's going to happen immediately. And knowing and being able to look at these charts, you can kind of understand what kind of time frame that you're looking at for these moves to potentially happen. But that's your Bitcoin chart. Let's see. I guess I'll go to XRP because most people, of course, know me from the XRP community, and we'll take a look at that in just a moment. So, very important thing you should notice here is same rules apply without me having to tweak my EMAs or anything. I'm not cherry picking, but you have the same rules apply to identify the important points and knowing where to be in this asset. So you had your breakout as it crossed white line and blue line and price, and it did exactly what you would expect it to do, go on to all-time highs, right? We had the loss of price, loss of white line, and loss of blue line, which ultimately led you to new lows, right? We came here, and this is a moment that I patiently waited so desperately for because I was using my method by this time. I was developing it part of the previous times before, but I was actually kind of using it in this area. And boy, I was tracking this. I'm tracking this. Price gets above. The 3 kind of stalls out. And I'm like, man, I'm waiting for this moment. And sure enough, I get here, kind of get a little quick price break and a 3 break, right? And kind of comes back the next month and actually finishes it off blue and everything above, and it's on, right? And then this red candle indicates the lawsuit. But it's important to note that even with the lawsuit, right, the momentum in the short term never took this 3 down, right? And sometimes it's good to just take out these candles, show y'all a little trick. But it never took the 3 down to threaten any cross. So I could tell here that even though price had slipped down here, the actual momentum of the trend was never broken, right? So sometimes you have to eliminate these candles to get a good picture of what's going on. And this is a little trick that I'll show y'all to eliminate the candles. So that momentum was not lost. And by knowing that that momentum is not lost, right, when price does recover back above the 19, of course, your rule would be make sure that you're in the asset, right, because it's going to do its thing. So when it recovers, and we'll bring the candles back in, it recovers here, and then as it should went on to $1.70, 80, whatever it was, right, which is a significant move to the upside. And this is what this whole method was mapped out to indicate, so that you know when this was going to happen to go on to this, and vice versa. You start having the losses, but the 3 is holding strong, right? You start having the losses, and this time your 3 is threatening. So by the time you get over here, right, your 3 is really low. You had it out, probably scalped you a little nice little win, whatever that came out to be, but it wasn't significant until we got this candle where price is losing 19, but you also got 3 cross. And worse yet, you got blue cross. And so now you have the conditions for setting new lows or whatever it may be, right? Your lows, your local lows, and those conditions actually create your low, right? So that's how we know where to buy at, because why? You want to start buying at your lowest EMA, right? So even that's indicated where you want to buy at, and you're not buying a fall of the knife here. So a lot of people hear me say dollar cost averaging is probably one of the most proven investment strategies, right? But if you're in this environment, here's one of the things that I used to argue with my kind of mentor and friend is I would say, yes, I understand dollar cost averaging, but if I know that this thing is going down, why am I buying here and buying here and see what I mean, buying in these areas, right? When I know it's just going down, right? I needed to hit the bottom and then start buying and say these as inefficient buys. And he would argue back, well, that's not technically dollar cost averaging. You're timing the market. And I think ultimately the best strategy is a combination of both because I do know that I'm in a downtrend. So it makes no sense to just buy here knowing that I'm in a downtrend when I can get a better price. So it becomes a hybrid of dollar cost averaging, putting this money aside to deploy, right? And then deploying it at your lowest moving average, right? And that's where you kind of win at. Of course, you're winning anyway because you exited here and you're buying back here. But I mean, as far as your new money that you want to continuously put into the system on a regular basis, right? You're withholding that money and deploying it here. And that's how it works. Got your bottom. Your short term is indicated by the white line, starts to grow back up. Price is back above your 19, so it looked great. Of course, it's struggling with it right now. Same position as Bitcoin, essentially, if you kind of pay attention to where these setups are in relation to the EMAs. So now we're waiting for price to get back above. We're waiting for 3 to get back above, and we're waiting for the blue line to get back above. And as we see, this is probably going to take some time because this is a monthly chart. It may take a couple of months for this to play out, depending on what the price action is. If price gets real hot, it can drag this up over a shorter period of time. Excuse me, but we would know what we're dealing with. But we're, able to visualize this here so that when we get both crosses, we know we have conditions for an all-time high. Consequently, if the 3 comes up, rejects off of this 19, right, and price loses this, it's an exit point, right? And then you try to pick up more XRP as it starts to test whichever of these lowest supports it's going to eventually hit at. But you got a pretty good pivot here. Now, of course, I'm making a lot of these moves on shorter time frames, but I'm just using this monthly time frame because, again, for people who consider themselves long term and they're not necessarily investors, right? These are not trying to catch tops and bottoms, obviously, because you see the exit points are nowhere near that, right? Entries are pretty good, but your exits are pretty, farther down than you could have exited. And this is why I make my exits kind of off my weekly chart, right? Because they're going to give me an earlier exit. Most of these exits over here happen at 74 cents. If I were to pop over to the weekly chart, we would see that using the same algorithm, using the same rules. Let's get this shrunk back down. Right, using the same indicators, using the same rules, the exit started popping up around $1.02. So you get a lot better exits by, taking these exits on your weekly trend as compared to your monthly trend. All the rules are the same. It just helps me illustrate it, and it shows you that you could have a lot less trades that you would ever have to make, right? If you're one of these people like, I don't want to be making the trades, I'm just pretty much a holder. Well, yeah, you can still be a holder, right? In a sense, right? When you're only having, one trend turn here, one trend turn here, one trend turn here. So over the, since 2017, 2018, you essentially only had 3 trends, which are 3 trades, right? And you're looking to make your 4th one here, right? I should have been buying here, obviously, but as far as the trend is concerned, we're going back into our kind of 4th trend that should be an upside, right? And these things don't happen often. So it's not like you're having to do a lot of trades in order to keep up with the trend. Now, you do on a technical basis have these breaks, right? So you were counting literal trades since the all-time high of January. You literally had 1, 2, 3, 4, 5, 6. We'll count that 7. It's a wick. 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, we'll say 21 months where you would have been doing any trading, because sometimes this will go back and forth within the month. So I'm trying to be specific here. But in that case, you'd only had 21 months total that you would have been taking trades within that month, with most of the time spent, right, not making any trades at all. And that's on the monthly chart. So it's easily executable. It's easy to identify these trends. You just have to know what you're specifically looking at in regards to a chart, right? Another thing I'm going to quickly bring up, and I'll probably end this, keep it short, is this is why I look at the DXY in correlation to figure out what's going on with crypto, and not the stock market as some people try to use, right? Because if we use the stock market and we actually look at a chart, right? So I like to let charts tell all my stories. We go back to the birth of Bitcoin, which was here, right? In the stock market, it took one of its very rare dips over long periods of time, right? This is one of the few dips that it had. When I say a negative trend, right? Because you got the cross and price losing, right? Or in this case, not a price, it's an average, but same context. So you only have this one confirmed kind of actual downtrend, and let's just zoom this out some more so we get a long period of time. So yeah, there we go. So you can see how far back this is, and stocks have been just on one trajectory that's consistently been up. Kind of had a downtrend here, but it didn't completely go negative, because why? Yellow didn't cross over that last EMA. Over here is about the worst that we got, because the yellow did cross over, and you got some of the lowest prices that we've seen, right, since the early 90s, right? And then it's been back on this downtrend. Well, again, if we look at this date, this is the beginning of crypto, right? So our entire crypto experience has been an environment where the trend has only been up for the equities market. Now we got a cooling off right now as we speak, but it was certainly no negative trend, right? Because we don't see this yellow line working its way back down here, and certainly not threatening the last moving average. So most of the entire time of crypto experience has been in a market where equities has been only in an uptrend. Now you do have things that can identify it, obviously in the charts, right? And that's why I say charts show everything. Because if we zoom in a little bit, we have our little dip here, right? And we have our little dip here, and that's kind of COVID. And this is correlated to one of the other environments where we kind of seen this, and this was so yeah. I mean, we've had little dips below it, specifically more COVID than anything, but the trend has only been up. So there's no correlation that you can make with crypto, because crypto has had many ebbs and flows during this time where equities market has only been up. Now, if you kind of put this in context of the dollar, right, and you think back of the dollar's DXY chart, this kind of explains where all the money goes when the dollar starts to get weak, right? Because they need to make returns on this dormant money that's just sitting, right? And so it goes into the equities market, and the equity market, as an alternative to the dollar, just stays and gathers more capital and grows that capital and gathers more capital and grows that capital. And so this is why this is kind of just this constant environment where people can put money in a bad economic environment and still make gains off of that money, as long as something doesn't significantly disrupt the economy at large. And so when you saw like the COVID thing happen, right, of course, equities dipped because business was disrupted, that all of this value is dependent upon the circulation of business happening, right? And so outside of those kind of things shutting business down, you kind of just maintain this, good environment for growth to continue as far as the equities market is concerned. Now, we did have this downtrend, even where the three is starting to cross here, which kind of is concerning. Bounced and it started to recover. So this is what we're watching, is how this play out. Is going to go back bullish and get back above, get your three back above, and continue onward like it has basically done forever, or um, will we see a downtrend actually, right? And so looks like it's confirming up, because we do have the three crossing back above. This downtrend here during this period of time, in my opinion, seemed like it correlated to the cost of capital going up with the interest rate raise. So we can see what impact it had on businesses and equities and the cost of capital getting more expensive. Um, and then it seems like these adjustments were made. People were able to figure out, how they were going to operate in this high interest rate environment and needing a place for money, to go as a result of the interest rates, situation. And we start seeing some money going back into the equity. So we'll have to continue to take a look on this, see if this goes back into its upward trend as the charts are indicating right now by the three cross. Zoom in a little more if I can. Yeah, we definitely got a three cross. And if I take out the candle, let's see. We'll take out the candles and get a look on the blue line. It gets lost up in there, so it's really hard to see. But it looks like you could potentially have a blue line cross up in here somewhere because it's probably running flat um, with the yellow, so it gets hard to see. But yep, you could have a double cross and this could go back bullish. And that's what we'll have to keep an eye on. So yep, those are just some things that I wanted to share real quick. I hope people can gain some value out of the information. If you have any questions, you can always hit me up on Twitter where I'm at most of the time, or catch me in the spaces, and we can always discuss it. But I hope y'all find some value out of information. And I'm gonna close this down until my next update. Thank y'all, and I wish you well.